Well, San Diego's real estate market hit a turning point. Inventory is climbing, homes are taking longer to sell, and prices are shifting in ways we've not seen in a couple of years. But don't panic, this isn't a crash, it's a correction. I'm Chris Spade with Keller Williams Realty San Diego Metro. This is your September 2025 market update and a real look at what's really happening behind the headlines. Now, I'm going to break down the latest data from detached homes to condos and how these trends could impact your next move.
We're coming into a more balanced market, right? But we're not at a buyer's market. So we just need to keep that in mind. And let's just go over it and see what the numbers tell us. This is going to give you a good idea. One, if you're a buyer, where you need to be, how you need to come in, and how strong you need to be in your offer. And if you're a seller, where do you want to price your home? How long do you want your home to sit on the market? The data is here, and this just gives us clarity. Clarity is power. So strong sales activity means growing inventory. San Diego County real estate market is showing signs of maturing in September 2025 with robust sales activity. That is paired with significant increase in available inventory. So the shift is actually creating a more balanced market environment after years of a tight supply. Total closed sales up 6.2% year over year. This is an increase showing sustained buyer demand. The median price for a home up 1.1% from last year. It's indicating a strong price stability, up $900,000 to $900,000. The average price increased 2.8%, up to $1.2 million. And the number of homes for sale, this is why everybody thinks the sky is falling, is because it also increased 29%. This is overall. So this is everything in the market. It increased up 29%. So the media would have you believe that the sky is actually falling. It's not. But the number of days on market is up 42 days. That's the other thing that they're looking at. They're like, well, Chris, the market is up and the market days are up and inventory is up. That is a natural buyer's market. No, it's not. It's not. You need to have a 6-month supply of inventory, and we're not even there. We're going to go over those numbers in a second. But homes are staying on the market longer, giving buyers more time to make informed decisions. Keep that in mind. And here's the other thing. This should give a seller pause. The reason for that is, let's say your home is on the market, and let's say your home is priced just above market value because you want room to negotiate. That's fine. I get it. A lot of people want to do that strategy. It makes sense if you want to do that. But here's the challenge. Let's say your home, they've seen your home. Let's say they've even gone back twice. But then your neighbor decides to put their home on and it's at the same or slightly better condition than your home. But their home is priced 5% or even 10% below market to garner a quick sale and multiple offers. Okay, that home sells first. Now that home might sell at market value, but you're above market value, which means in order for you to even get the level of activity that they got, you have to come down to here to hopefully get to here when you sell your home. Now, I'm not telling you it's a horrible strategy what you want to do, but you just have to keep that in mind because homes are sitting on the market longer. So let's say it takes 42 days to get that offer, right? Let's say you get that offer in 42 days, you have a 30-day close at 72, but you need to be out in 90 and you have to start shopping for your next replacement property and everything's got to close simultaneously or close to each other. That's going to add a lot of stress. So just keep these things in mind. It's strategy, it's open communication when you're putting your home on the market. But buyers, you actually have a few extra days that you can go sleep on something. You don't have to buy it right away. But the good news is the percent of list price, you're getting approximately 97% of your list price right here when you are putting your home on the market. Let's talk detached homes only to start out with, and then we'll get to the attached homes. So the detached segment is experiencing a reconciliation period and a recalibration period. So while sales volume remains healthy with moderate growth, the pricing has softened slightly as inventory expands. Now, this represents a shift towards more normalized market conditions after years of seller advantages, and they are extreme seller advantages. Remember the day when houses were selling in like 11 minutes? And obviously that's not the case anymore. But let's talk about the median price, $1,020,000. Okay, 1,020,000. That's down 2.8% year over year. This is the first notable decline in recent history. It's worth noting because a strategy of listing too high just to negotiate down might not work because buyers are looking at the data. Third-party sites are very good at pushing out data to buyers that are looking, and they are looking at this data. Now, the average price is 1.42 million. This just says that in the luxury market, they're seeing a 2.3% increase. Now, the luxury market kind of starts at about 1.3, 1.35 million. So it indicates strength in that market. And the closed sales, this is the thing. Buyers are still buying. So for you buyers who are waiting for the market to crash, there's buyers out there who are actually buying because closed sales, steady transaction volume demonstrates continued buyer confidence, up 5.1%. Inventory growth, that is up 19.2% in this market. More choices means more availability for buyers. So if you're putting your house in the market, your house has to stand out. The number of days on market, 41. So it's a little less than the average between the two, but they are taking a little longer to be on the market. And the month supply of inventory is 2.6%. That's up 13%, which means if we didn't list one more detached home in San Diego County, it would take us 2.6 months to sell each and every one of those houses here in San Diego. All right, let's talk attached homes. Entry level strength is driving growth. So these first time home buyers, they are out there and they want something because they're out here going, I'm not going to pay $4,000 or $5,000 a month for rent when I can go buy a place and earn equity. It just doesn't make sense. The math doesn't math. So the attached home segment, including condos and townhomes, is demonstrating remarkable resilience and growth with median prices climbing and sales are surging. This segment is benefiting from the strong first-time homebuyer demand, and a lot of these people are taking advantages of the FHA loan, the Cal HFA. They're taking advantages of first-time homebuyer programs and grant programs. So the median price growth you're seeing up 3.2%. So it's now at $651,500. Showing strength and affordability in focus segments. Average price increase up 5.6%. Sales volume growth 8.1%, outpacing detached homes with the most robust transaction activity. So if you are selling a condo, this is what you need to know. You're in a good spot. Now, the inventory has surged up 45.2% year over year. So again, just like detached homes, you actually have to pay attention to this because this is important. This just means there's more inventory. And if you want your home to sell, I'm seeing condos, some are sitting a lot longer than others. So you just need to make sure that you are doing this right. But your inventory is surging in this area. Market days, 43 days, and month supply of inventory, 3.5. Again, that just means if we did not list one more condo in San Diego County, it would take 3.5 months for us to sell all those condos. All right, let's talk new listings and inventory. So one of the most significant storylines in the San Diego market, okay, is that there's a dramatic increase in inventory. And after years of chronic undersupply, sellers are finally bringing more properties to the market, fundamentally changing the dynamics for both buyers and sellers across all property types. Let's start with detached homes. In the month of September, 1,700 new listings, up 3.4% year over year. You have a steady flow of single-family inventory, sellers responding to market conditions, and there are more options in suburban markets. So options in Metro San Diego, University Heights, North Park, those areas, the beach, those are not up as much. But when you start stepping out, you're going to Serra Mesa, Kearny Mesa, Claremont, Tierra Santa, those neighborhoods, you're starting to see the biggest increase in growth over there. Attached homes, 1,026 homes, up 11.9% year over year. It is a significant surge in condos and townhomes availability, and entry level inventory is expanding. The urban core, okay, the urban core, downtown San Diego, the markets like Hillcrest, University Heights, North Park, they're all seeing increased activity. Countywide inventory growth up 29% year over year. The most substantial inventory increase in San Diego has been seen over 5 years. This is representing a major market shift, which is empowering buyers with more choice and leverage in negotiation. Keep that in mind if you are selling. Buyers have leverage in this condo market. You need to be aware of that as you are thinking of putting your home on the market. So let's talk about pricing trends. Okay. Now, this is price movements over September 2025. They revealed distinct trajectories between detached and attached homes. So while detached properties experience the most moderate softening, attached homes continue their upward climb. Okay, so you see that the detached median dropped that we had talked about, but the detached average has gone up, and that is because of the luxury market. Okay, the attached median, the attached average, both went up. So don't look at this if you're selling your home thinking that you have to give it away if it's a detached. But you, like I said, you need to price strategically in those markets. You need to be very strategic in your pricing if you are doing that, because we want you to get multiple offers and go up. If you're in that luxury, the luxury is seeing something different, because this right here, this is showing that 2.3% change in the luxury market. Remember, we talked about a second ago, that's just a little over 1.35 million, that increase over there. Let's talk market velocity. The pace is definitely slowing down because buyers are gaining leverage. This is where you have to test your motivation. Okay, you have to be motivated, and if you're motivated, your home will sell. But the days on market is a critical indicator of market temperature, and it has risen across all property types here in San Diego. Now, the cooling in velocity reflects a fundamental shift. Buyers now have the luxury of time to conduct due diligence, compare options, negotiate terms, rather than rush into bidding wars. And by the way, cancellations are up. So if your home's been on the market for 40 days and you just got your first offer, you might want to consider how you're going to negotiate that so you can bring it to a close. So in the detached market, like we said, detached homes, 41 days, up 20.6% year over year. Single family homes taking nearly a week longer compared to sell than last year. So as increased inventory gives buyers more negotiating power to make more decisions. On the attached side, 43 days on the market, up 19.4% year over year. Even in the competitive attached home segment, properties are staying available longer as the surge in listings creates more options for buyers to consider. Buyers are taking longer to evaluate properties, and sellers are adjusting expectations accordingly. Okay? That frenzy pace of 2021 to the beginning of 2023 has given more weight to measured, rational market environments. So we are not where we used to be. Just keep that in mind as we are moving through these markets and as you are putting your home on the market. Let's talk about affordability and demand for just a second. So housing affordability remains a critical challenge for many San Diego buyers. Now, the housing affordability index measures the percentage of households that can actually afford the median priced home. It has dipped slightly through the potential interest rate relief in Q4, and that could provide welcoming relief for many buyers. But the affordability index is at 47, which is down 2.1% year over year. So what does this mean? An index of 47 indicates that 47% of San Diego County households earn enough income to qualify for a median-priced home in San Diego County. Remember, that was $900,000. This represents a modest decline from last year as home prices outpace wage growth. Let's look ahead because we want to look ahead. If mortgage rates ease again in Q4 of 2025, as many economists predict, monthly payments could become more manageable, potentially bringing more qualified buyers into the market and stimulating demand. So the potential Fed rate adjustment could lower mortgage rates. Now, even a 0.5 rate drop could save buyers hundreds monthly and increase their purchasing power by thousands. And lower rates may bring sideline buyers back to the market, which I have a feeling that we're going to be seeing because you've got all these buyers that wanted to buy but couldn't buy because of the interest rate hike. They thought they were going to be smart and wait, and it's been 3 years now. So I think that, yeah, we're gonna see those people come back, and when we do, it's just going to get even more competitive. All right, let's talk about the big picture. The market is finding its balance. Okay, September 2025 marks a pivotal movement for San Diego County real estate, and after years of extreme seller advantage, characterized by bidding wars and instant offers, the market is transitioning towards a more balanced market where both buyers and sellers can achieve their goals with proper strategy, and realistic expectations. Inventory countywide, we've said, up 29%. Days on market are increasing. Steady demand, sales volume is up, showcasing sustained buyer interest. Now, detached homes, slight cooling, all right? Median price is down, but remember the average price is up. Inventory growth is creating buyer opportunities, best prospects for negotiation in years, and sellers, oh, there it is. I said it early on, you have to price competitively, okay? Median prices are up 3.2% year over year. Strong first-time buyer demand, and affordability is driving activity, okay? So this is the key takeaway. The San Diego market is balanced, but it's showing cautious optimism heading into Q4 of 25. Neither buyers nor sellers hold overwhelming advantage. If you want success, it requires informed strategy. So you need to be talking to an agent who is not going to, pardon my French, bullshit you into signing an agreement. Talk realistic pricing and get expert guidance. Okay? So if you are thinking about your next move, whatever that might be, if you're a buyer, seller, you have a life transition, you're a senior downsizing, or you're upsizing or whatever, let's talk. Okay, I would love to be the one to talk to you. My contact information is down below in the description, and I would love to set up a consultation and just have a no BS conversation. Okay, let's just meet to talk.